While it is possible to have a dual parallel standard of gold and silver, I suggest that gold is more suitable right now for the following reasons. Number one, gold is presently a major financial market, with market turnover on the London Exchange alone of over 20 trillion US dollars, which is higher than the numbers used for United States GDP and relatively comparable to the world's property, bond, equity, and actually also EXD derivative markets. Silver's market cap is just a small fraction of this. Gold is still saved rather than consumed, while silver is chiefly industrial metal. Here I have actually a round, I believe it's from the Delaware Valley group, 1 ounce silver round. Gold is still saved rather than consumed, while silver is chiefly an industrial metal. Most importantly, there are about 60 to 80 years of above ground stock of gold as compared to the flow rate or amount of gold mined in an entire year. Silver's stocks to flow rate is only not 60 years, but only about a year and a half. While the ratio, while the ratio in the earth is roughly 8 ounces of silver mined for every ounce of gold, the industrial consumption of silver has resulted in the rather strange but true fact that there is far less above ground stock of silver than gold. There's over 5 billion ounces of gold stock, but just 1 to 2 billion ounces of silver stock available. Put into volume terms, the entire gold supply would fit in a cube about 20 yards to a side, while the entire silver supply of above ground stock would fit into a cube only about 14 to 18 meters in size. So we're pretty much talking a little bit larger than this, probably about twice the size of this room. These above factors, combined with a study of futures markets and the efforts of central banks to suppress the spot prices of gold and silver, lead me to conclude that the silver to gold ratio and the silver to barrel of oil ratio, the silver to loaf of bread, whatever, will eventually likely skyrocket, and it will not have the potential stability that gold will offer to the marketplace. However, after the stabilization occurs, I do believe that silver would be a good candidate for money in a future parallel standard with gold. So for the purpose of the talk, I will just move ahead with the transition to an end goal of a monetary unit being equivalent to gold grams. I want to add 2 points. First is that I believe that individuals should be free to trade and exchange with money any mutually acceptable, I'm not sure if I can get through the rest of this. Any mutually agreeable commodity or item as they wish, and the government's only role should be to mint money and maintain the integrity, meaning the mass, of the monetary unit and protect the liberties of individuals in cases of fraud. Of course, the government currently holds a monopoly on the privilege of creating money and currently commits wanton fraud. So obviously, a better solution would be that of Rothbard's suggestion to allow private firms to compete, as was done in the case of the Thaler, a German silver coin made by a 16th century private minter. Thalers were renowned for their uniformity and fineness, and poor pronunciation later resulted in the Spanish milled dollar, which the American dollar was originally based on. Second, since I'm doing a lot of talking about coins and no one really wants to carry coins around all over the place all the time, I want to add that electronic digitized currency in gold grams or silver ounces is already being done. The vaults of independent bullion banks, would hold the physical gold or silver, and when you swipe a charge card, it would deduct the specified weight of metal from your account to the new parties. Obviously, these vaults would need to be independently audited to prevent counterfeiting, and customers must always be able to remove their metal whenever desired. Okay, now on to the transition possibilities. First, we need to picture a scenario in which the transition to sound money will realistically take place. I believe it is very naive to assume that magically one day Congress will wake up and decide that they have the political will to transition to sound money. Therefore, I believe the need for such a plan will take place at a time when dollar and treasury markets are in severe crisis. The transition suggestions made by Douglas Naso in his book Honest Money and Edwin Vieira are worth mentioning and studying. Naso points out that the transition from the constitutional silver dollar pegged to gold to the current Federal Reserve note, which is an unbacked IOU of debt, took place slowly and went through phases from mostly commodity-backed silver and gold to the classical gold standard, which is fractionally based on gold, to the gold bullion standard, which existed from 1933 to 1971, when Nixon closed the gold window, to a fractional reserve fiat note until roughly the year 2000. What a lot of people in this room might not be aware of is that from 2000 till present day, the fractional reserve system has broken down and no longer exists, as I prove in an article that I've written called "Yes, Virginia, There Are No Reserve Requirements." Now's a suggestion to slowly transition backwards from the Federal Reserve note to 100% commodity commodity-backed gold and silver money. While this idea is worth considering, I don't believe it is viable due to the time necessary, and since fractional reserve banking has already broken down, we are off the precipice, so to speak. I do believe that, in hindsight, I do believe that from 1980 to 2000, such a reversion was theoretically possible, but unfortunately very few people were agitating for this, but most especially Congressman Ron Paul of Texas. It was never seriously discussed. The next idea comes from a member of the Mises Institute, Dr. Thorsten Polite, and the man that I believe is the most knowledgeable monetary economist on the planet, Dr. George Guido Holzman, also from Mises. I'll refer just to Polite's idea here, which is a very simple one, which is to simply take all of the central bank gold and back the fiat currency with it overnight, thereby making all the money 100% commodity-backed in one fell swoop and limiting the chaos to the people. This idea certainly warrants further discussion and is, in fact, pretty attractive. Polite has a great one-hour lecture that I will link that summarizes his paper. Again, I believe that the key risks to Polite's plan lie in two factors. One, there's overwhelming evidence from groups such as the Gold Anti-Action Trust Committee that central banks, including the Fed, have leased out large portions of their gold on the spot market. And I'll document this as well. Since the central banks carry gold on lease and gold in vaults as a single line item on their balance sheets, such a calculation is only possible if valid audit results are available. Central banks claim to possess just roughly 20% of the world's above-ground gold stock, but this number in reality may actually be less than 12%.